Hey guys, Max here, and this is your daily market update for yesterday, the 30th of December. Markets were, of course, open. We had some Tesla madness, some bad news for cruise liners, and some good news for the US job market for a change. So let's just jump right into it. So starting off with the markets, what happened over the day? Well, most of the day, American stocks were mostly just doing okay. But in the last couple of hours, we saw the S&P 500 drop, erasing the gains it had made, and resulting in about a 0.3% drop over the course of the day. Some big tech names dropped a fair amount as well, with Microsoft and Apple taking a little dive, dragging the Nasdaq down as well. Most other markets were pretty lame altogether. The MSCI World Index fell 0.1% over the day, so not really anything major there too. Bonds across the world fell a little bit. 10-year treasuries were down 4 basis points along with Britain's 10-year yield as well. Gold actually rose almost a full percent and the dollar spot index was pretty much unchanged. As for crypto, again, no real major changes. Bitcoin sitting at its support levels around $47,000. Ethereum sitting at about $3,700 and all the other altcoins doing something similar as well. The agenda for the day seemed to just be markets as they are, nothing really changing, no real news or no real news large enough to move markets as a whole. Now that idea of the bond markets, stock markets, futures markets, all of this just being a little bit boring was kind of expected. We're still in the holiday season, there's far less trading than normal, and companies just tend to announce less news at this time of year. Obviously, there's always talk of a Santa rally, which is supposed to come around Christmas time each year and give markets a strong boost, and it is often quite strong, and we did see it for a few days this year, but it stalled pretty quickly and seems to have died out a little bit now. Thankfully though, some interesting things did happen over the day, even if they didn't move markets as a whole, which is great because otherwise I'd basically be out of a job. Now, as is so often these days, there's been a little bit of drama with Tesla. This time the headline reads that Tesla is going to recall 475,000 vehicles due to some safety issues. The stock fell about 1.5% on this news. To be honest though, the stock's sitting at about $1,070 a share at the time of me making this video. A week ago it was $1,000 and a week before that it was $900, so investors really don't seem too worried by this news at all. As is usual for Tesla, there are some people saying that this news is proof that Elon is the devil incarnate, that Teslas are death traps and that the company is just one giant fraud, and then there are others claiming that this is a short seller attack, that some weird hack or manipulation by the media is going on, or that it's all FUD. And as is almost always the case, the truth lies somewhere in the middle. It is true that these cars are being recalled, but it isn't because they're all about to just spontaneously combust, catch on fire, and take 10,000 gallons of water from a fire truck to put the fire out. 120,000 of these vehicles have problems with the front hood. I'm not exactly sure what these problems are, but knowing the quality control issues that Tesla has had in the past, it's probably something like watertight seals or just a latch problem. To be perfectly honest, it doesn't seem to be anything major and not a huge deal. The other cars have problems with the rear view camera, which again, isn't really that serious. They're used when reversing, but people were reversing cars for a century before they had rear view cameras, and loads of cars still don't have them today, at least outside of the US. I personally have literally never owned a car with a rear view mirror, just to put that into perspective. Again, this really isn't some huge issue. It's pretty minor stuff, but the number of cars affected is rather bad. Tesla sold only about 500,000 cars last year, so in terms of how many are being recalled as a percentage, this is still quite high. I don't know exactly how much this will cost Tesla. I don't know how much it's going to cost for each individual car recalled and to be fixed, but let's be honest, it probably isn't going to be cheap. 500,000 of anything is very rarely cheap. On top of that, if I was one of those Tesla owners who had been waiting for months to get my car only to be told I had to give it back because they had problems during production, well, I'd be pretty annoyed too and a bit peeved off with the brand, and my estimation of the brand would certainly go down. Now, had this happened to another car company that wasn't Tesla, but everything else about the company was identical, then I would have expected a pretty heavy share price hit. But let's be honest, Tesla transcends reality, and we shouldn't expect it to behave like other car manufacturers because historically it just hasn't behaved like other car manufacturers. Now here's the big question, is this all FUD? No. Please don't use the word FUD, I cannot stand it. Answer criticism based on its own merit and shoot down criticism with facts. Don't just scream FUD like a child, it's painfully petulant. Please stop it, I just can't stand seeing that word any longer. In other news, cruise liners got an unhelpful hand from the CDC as they came out and said that everyone should avoid cruise ships, even if they're fully vaccinated. Obviously, Omicron is spreading fast, literally all over the world, and cruise liners, airliners, and travel stocks have been getting hammered for almost 2 years now. Now, some people obviously thought the pain was over, and it almost was for cruise liners, but the CDC decided that they wanted these cruise liners and their operators to suffer just a little bit more. To be clear, what's happened isn't a ban on cruise liners at all, and it's not any kind of restrictions either. It's just the CDC telling people that cruise liners are very likely to spread the virus, which, to be fair, they are, that's very true, and that people should avoid going on cruise liners, which is actually an opinion and not something the CDC should be stating as fact, in my opinion. Obviously, this is going to shake confidence in some people. It might not impact every person and change their decision regarding going on a cruise, but it certainly will impact some people and stop some people from spending their money there with those companies, and as a result, cruise stocks fell pretty sharply. Royal Caribbean, Carnival, Norwegian Cruise all taking decent hits on the day and losing a couple % each. There are some fears that this could just be a warning from the CDC, that they aren't banning anything yet, but that this could be the first step in reintroducing restrictions regarding cruise ships in the future, and those fears are obviously playing out as well, and so some of the stock losses could be due to that. Yesterday, we got data regarding jobless claims in the US, and to every analyst's surprise, jobless claims actually fell. There were only 198,000 unemployment claims over the month, down from the expected 206,000, which is the lowest it's been since the start of the pandemic. There have been a lot of worries regarding this. Obviously, there is a very tight labour market, but labour force participation rate has been ridiculously low over the last few months, so no one has been 100% sure how this data would develop. It's also worth noting that it might seem quite obvious, but the data is for newly unemployed people, so there are 206,000 newly unemployed people applying for support, and as a whole, there are still just over 1.7 million people who were already on that support this month. Now that is, again, a little bit lower than we saw in prior months, so that is also an improvement, of course. The Fed had been targeting low unemployment for months now, and that was their reasoning behind ignoring inflation data for so long, and we are seeing unemployment data go in the right direction, but not nearly as quickly as the Fed had been forecasting, and so this hasn't all been good news. There were also fears that Delta would impact the labour market months ago, but those fears never really materialised, and then we saw similar fears emerge regarding the Omicron variant, but so far again, those fears have yet to materialise. Most people aren't being pushed out of the labour market by their fears of the new variants, they're just getting on with lives and getting back to work, those who at least want to. Now, sadly, press freedom in Hong Kong has continued to decline, and this year has been absolutely awful for that topic as a whole. Of course, earlier in the year, we saw Jimmy Lai and the Daily Apple basically disappear. The newspaper that was fiercely pro-democracy was shut down and Jimmy was arrested on pretty much nonsense charges. The newspaper doesn't really even exist anymore, and Hong Kong authorities have been going around charging journalists and internet users with these old laws that put these people in jail for 2 years for literally just speaking. Journalists are undertaking hunger strikes to try and protest their freedom, but sadly it looks like it's all in a little bit of vain. Hong Kong authorities came out the other day and claimed that it is journalists who are damaging free speech by hiding behind that term and forcing the authorities to ban their speech. This is the language and the diction of an authoritarian state. It's a real shame to see it going this way, and an even greater shame to see so little being done about it in the West from our governments and our authorities, but none of this is really surprising. Now, in weird China dictatorship rules, people on the mainland have been filmed being paraded through towns naked and being whipped as punishment for breaking restrictions. Now, this is obviously utterly medieval and just ridiculous that it's happening in the modern age. No doubt, though, there will be at least a few Communist Party shills in the comments to tell us why we are the barbaric ones. Now, of course, there was also some news regarding Chinese tech stocks, but I'm actually going to save that for the weekend when I'm going to go pretty in depth on it. In short, though, Chinese tech stocks are up. People are betting that the crackdown is finally over. They're catching that falling knife once more, and we'll talk about it in a couple days. Now, in crypto news, MicroStrategy, the investment firm run by Bitcoin maximalist Michael Saylor, has bought more Bitcoin. That firm now owns 1 out of every 170 Bitcoin that will ever exist. And strangely enough, people in crypto are celebrating this. I really don't get this, to be honest. The only benefit of crypto is decentralization, and without it, crypto is no better than fiat at all, and in fact, it's actually quite a lot worse. This much of the money supply, or Bitcoin supply, I should probably say, being owned by one firm is not good, especially one with as poor a track record as it has. Now, for anyone not aware, Michael Saylor has run MicroStrategy for a couple decades now, and he was actually involved in the dot-com bubble, and he was one of the biggest losers in the bubble. I think this is just off the top of my head, but I think he lost about 95% of the fund when the bubble popped. He was completely consumed by the hype, got everything wrong, and lost pretty much everything that his investors gave him. Now, I'm not saying that that's going to happen again this time, but if you've invested in MicroStrategy, you ought to know the history behind the firm and the history behind the man running it, because it isn't as glorious as he'd like you to believe. Now, that is pretty much it for today. Of course, tomorrow is New Year's Day. I am booking the day off. I'm not going to be doing a daily video, but hopefully there will be another video out a few hours later to make up for that absence. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own personal investments. This is your last opportunity to get January entirely free if you join in December. So just for today, if you're watching this in January, it's too late, I'm sorry. But if you're still watching today, sign up today and January is completely free. This deal only lasts for one more day. So if you want to take me up on that deal, then make sure to do it today. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.